Middle in the figures now with Stephen with Business News. He's starting with Google's parent company, Alphabet. Their profits have been hit, haven't they, by an EU fine?
The internet giant says that it's reviewing its options in its first financial results since being fined a record €2.4 billion by the European Commission last month. The bill resulted in Alphabet's earnings falling by more than a quarter in the 3 months to the end of June. That's the biggest drop in the company's quarterly profits since 2008. Now, the fine was levied for what the EU says was Google abusing its dominant position by promoting its own services in search results. Without the fine, the search giant's profits would have jumped by 28% compared to last year. This as revenues rose by 1/5. Google could be facing more trouble ahead with the EU. Another investigation over the Android operating system is underway.
Now let's turn now to the price of oil. It's rising today. This is after Saudi Arabia said it would cut exports.
Oil producers from the OPEC cartel, along with the likes of Russia, have been trying to boost prices since last year by reducing their production. It seems that some of those countries aren't all sticking to their promises, though. OPEC officials say they're considering an internal crackdown on members who don't abide by the limits. In addition, Saudi Arabia is saying it'll limit the amount of oil that it sells abroad. Emerald Maxwell has more.
8 months after reaching a landmark deal, Russia and OPEC members are still struggling to keep oil prices from falling. After an initial boost, Brent crude is down by 13% so far in 2017. Meeting in St. Petersburg, producers pushed for stricter adherence to the agreement. Iraq and the United Arab Emirates are producing a lot more than they'd agreed to, leaving countries like Saudi Arabia and Russia to bear the brunt of output reduction.
Although conformance with the production agreement remains strong at the aggregate level, some countries continue to lag, which is a concern we must address head-on.
OPEC members Libya and Nigeria had been exempt from the cartel's self-imposed limit, but Nigeria could have to slow its pumps once it reaches 1.8 million barrels a day.
We remain supportive of our brothers and partners in both of those nations as they work on the recovery of their oil industries and their economies. The committee, however, should monitor the impact of such growth on global supply.
Analysts say even deeper cuts may be necessary in the face of competition from America. The US is not a signatory to the deal, and its rising shale production has offset the impact of the output curbs. Last week, OPEC member Ecuador put another crack in the agreement, saying it could no longer afford production cuts.
Well, let's take a look at how oil markets are trading today after all of that news. The Brent crude index is the international benchmark for the price of oil, up around 0.5% to just under $49 a barrel. That's down, though, from about $54 a barrel just over a month ago. So no great sign that those measures being taken by OPEC are having much of a difference yet. On the stock markets, a muted picture in Asian trading today. Investors keeping an eye on currency movements as the euro slipped back from its recent rally against the dollar. Also focus on the Federal Reserve meeting that gets underway later today in Washington. Some more of the day's business headlines for you next. And Amazon's plan to buy the US retailer Whole Foods may have hit a speed bump. Democratic lawmakers have called for competition regulators to examine the deal worth almost $14 billion. Whole Foods had hoped the sale would be completed by the end of this year. It's now saying it may not be done until mid-2018. The UK Serious Fraud Office has begun an investigation into mining giant Rio Tinto. The inquiry will look into suspected corruption at the firm's business in the Republic of Guinea. Rio Tinto agreed to sell its stake in the Simandou iron ore project last October. The firm says it's fully cooperating with the probe after reporting itself to authorities in November. And a market milestone on Wall Street as Morgan Stanley has surpassed the market value of its rival Goldman Sachs for the first time in 10 years. Since the financial crisis, Morgan Stanley is seen as having taken a more slow and steady approach to its business. At one stage in 2009, though, Goldman was worth more than $50 billion more than its rival.
Stephen, I need your help with this next story. I don't understand. The story is that there's been an uproar on social media. This is after it appeared that Microsoft was phasing out Paint from Windows. Now, I would have thought paint on Windows is no
This
good.
is a bad
You can't
thing to
see
begin
through
with.
them.
Yes, exactly.
Exactly. But it appears it might not be disappearing after all.
No, so Paint, if everyone's first computer, I think everyone spent most of their time playing on Paint. It's the basic painting app available on Microsoft Windows. Now, it's been around for 32 years, but Microsoft said in a developers update that it was going to stop actively developing updates for it. And that appeared to indicate that it was on the way out. It means potentially it could be removed in the future. This, as you might imagine, has provoked lots of reaction on social media, with people, of course, announcing the death of this very simple painting app. But Microsoft did publish a blog post saying that Paint would still be available for free download. It had said earlier this year that Paint has more than 100 million monthly users. So what'll change is that it might not be automatically available with Windows, but it'll always be available if you want to get it. There's also an updated version of Paint that I didn't know about called 3D Paint.
3D Paint?
I feel like that's the rest of my day sorted.
So if I run out of paint, I can just download
You
it.
3D, yeah, exactly.
Excellent stuff. You know, you learn so many things, don't you, watching this programme? Stephen Carroll keeping us all informed with the business news.